Good morning, everybody. Hope you're having a good long weekend. Let's get into our weekly prep for the week. Starting with the overall market, we've got a pretty two-way market going on right now. It's been that way for the last couple of weeks. As you can see with the price action on the daily, some big reversals a couple weeks ago, and then into this week, a pretty big move. We had from top to bottom about almost a 3% drop from the highs to the lows again this week. So, we've seen buyers step in when needed, but sellers are now finally getting a little bit more control, I would say, overall in this market as we ultimately failed to break out over 7,000, and that led to a pretty big sell-off to end the week. On Friday, we did hold 6,800 and put in a higher low and closed right in the middle, right near the 6,845 pivot. So buyers stepped in, sellers also stepped in, and we ended the day near Thursday's lows. So going into this week, we're going to continue to have a bit of a neutral mindset, but there's some things that are, you know, leading toward more corrective behavior. So I'm a little bit more 60-40 bearish, bullish going into the week, and I kind of have had that stance just in the way that the market's been acting over the last couple of weeks. Now, one thing to note is the market will reset through, corrections in time sideways or through sharp sell-offs. And we are getting a lot of price action within this range sideways, as it is, two-way trading, and ultimately we're only really 3% off the highs. So, this we want to keep an open mind. Can we correct further? Certainly, and that would be healthy. It would give us some good buying opportunities, bigger picture, but it doesn't mean that that is going to be the case. So if we end up resolving to the upside, we really need to break out of this 7,000 range. We need to see the VIX get back under 18. That's where I like to see it start to crack back under 18 here. As you can see, it's now pushing back through 20, which as you get above 20, things start to get a little bit more volatile in that way. So that's kind of the overview for S&P. And then as far as economic calendar this week, we have a decent amount of data coming out throughout the week. All eyes are going to be more so on PCE, GDP data on Friday, but we will have some jobless claims information on Thursday to look at, and then FOMC meeting minutes on Wednesday. So want to see there's some rate cut sensitivity going on right now just because of some of the revised job data that we got. I think it was the biggest revised job data we've ever seen in history, or at least 20 years or something like that. So, they're doing what they can to try and support this market, but it might not go as fully planned. And if we see a bigger correction, it will likely be more violent, like we've seen in the past, just given the amount of participation we have across, uh, you know, the board from retail to institutional trading. So we'll see how this unfolds, but these are the events that we want to keep on watch. And then as far as earnings go, we still have a lot of earnings coming out. The big ones are mostly out of the way, but there are some that are interesting to keep on watch going into this week. Toward the end of the week, Walmart will be a good one to watch as we, kind of saw them shift their focus into a tech first company. They're added to the Nasdaq, and that's a pretty big shift for a large retailer like Walmart. We've seen it change its character a little bit. It's still not the easiest name to trade, but we'll want to watch that one pretty close as the character of the stock starts to be impacted. With Palo Alto and Cyber reporting on Tuesday. I kind of skipped over that one a little bit. Let's just take a quick look at the chart for that because we've seen cyber and software just get hit pretty hard this year to start things off. So we're just kind of positioned in the lower end of this range on Palo Alto. So I just want to wait and see what that one looks like after earnings. And then Walmart has just kind of made its way higher, has been a good trender. And with earnings up next, this is a pretty interesting one to watch. So the last earnings we had, really tricky price action. It put in this kind of frustrating flag, if you're trying to trade it or get position, and then it really broke out aggressively as the market has sold and things get a little bit more defensive in terms of rotation. We've also seen McDonald's and other kind of defensive plays catch a bid. So this one's compelling because it's still a retail. but there's that tech first element that is an underlying current for Walmart that makes it more interesting than normal. Let's see. Other than that, not a whole lot else. LMND could be interesting. Wayfair could be interesting. Maybe John Deere as well. Let's take a look at Deere real quick. A big breakout over the last couple of weeks. Maybe a good give and go candidate depending on what the earnings are like. So we'll just have to kind of wait and see on these, but there's still some earnings to look forward to. All right, so getting into some of the prep as far as trade ideas go for the week, starting with S&P, this is pretty straightforward to me. Under 6,800, sellers gain more momentum. We have pretty big support here at 67.62 to 67.40. So I'd be targeting that initially if we break lower. For the upside, I'd want to see the 68.70 pivot reclaim for move back to 6,900. Big picture, buyers definitely want to get through 6,900 to look much better and create some momentum. Until then, I think it's a little harder as pops continue to get sold in the market. ASTS is an interesting one. So this has been a really strong theme, aerospace and defense, to start off the year and even into this year from last year. We've seen a pretty big bid, and a lot of people are speculating that these sectors are going to emerge as leaders in years to come. So with ASTS, it had a over $1 billion offering that led to a big gap down on Thursday, and then on Friday we had a bit of an inside day. So this is potentially a big dip buying opportunity for the long term, but you don't want to get ahead of yourself with that. You want to let price signal along first. And so I'm looking at two trades here. The first is just a simple continuation trade. If we break the 79.89 low from last week, which is very defined here, we're targeting a quick move into 76.33. If we see that level trap and turn and put in a failed breakdown, if we get that signal, then that could be that dip buying opportunity for a move back to even up to this 91 area. For the prep, I would initially just be targeting this 85 high from Friday, but ultimately I think this can get up to Thursday's opening around 88 and then start to get into the gap and push toward 90, 91. So that's ASTS, looks pretty good for an opportunity in either direction. So we'll just want to let price validate a signal. And then Boeing has been a really strong name to start off the year. There's a lot of tailwinds for Boeing, and we've talked a lot about this big picture monthly chart and weekly chart. It's trying to break out of over a 5-year consolidation phase, which anytime you have something like that, there's been other examples like J&J we've referenced and other names that the bigger the time frame you have of consolidation period, the bigger a move, the bigger trend you'll get from it, and it's also relative to that time. So I think, we're looking at this short term in terms of trading. We're also looking at it broadly, big picture. Have an active swing for June on. That's doing pretty well as this starts to push up to the top of this consolidation phase that it's in. So, but going into the lower time frame here, more specifically, we've rejected this 246 spot consistently over the last week or so. And every dip has been bought, so that's a good sign. Buyers keep stepping in and holding the trend where they need to. That's good behavior technically. And now we're set up with multiple tests and even a trap at this 246 that makes the odds higher that if it breaks now, we'll get a move to 250, 254 next. So Boeing looking really good. GS banks were a really strong leader going into 2026 and then saw some continuation and momentum higher to start the year and have since put in a bit of consolidation over the last month or so. On Friday, we put in a huge failed breakdown at 880 and reclaims 900. So looking at a reclaim of this 900, 905, as long as this defends, we're looking at continuation to 919, 929 next. Microsoft has continued to be weak as software has gotten beaten up all year. IGV specifically is pretty much fully fallen apart. Microsoft has been kind of within the leader, a signal of that trade, big picture, and it's just continued to see relative weakness. Every bounce gets sold, and there's really no bid at all in Microsoft. So if that continues to be the case, we have a pretty defined spot here on 400, 398 specifically. If that breaks, watch for a quick move into 392. 392 breaks, that's where it kind of accelerated lower on the 5th of February and created a temporary bottom. You would expect that to revisit And if that breaks, even more selling is set up. Once this reclaims like 425, then I think the upside will start to look better. At some point, software likely catches a bid. It's just we don't want to guess when. This is more of just keeping an eye on this play and continuing to follow the price action as long as we have weakness within the trade. QQQ could be a nice way to simplify. Tech's been harder overall, but if we get a little bit of rotation, we do have this higher low set in place on Friday, sort of similar setup to S&P, but I think as a way to simplify the upside, this 607 is really defined. So a reclaim of 607 where we rejected on Friday can spark a rally back up to 613 next. SNDK, the memory trade. So this has obviously been the most resilient trade in the market this year, and it continues to hold really, really well. I mentioned multiple times since the earnings exhaustion gap that this is just starting a new leg of the trade. It's not a reversion trade yet. There has been reversion, like one good reversion trade within it, and an exhaustion gap play. But big picture, this is just setting up the next leg of the trend. That has made it a little trickier to trade on a day-to-day basis over the last 2 weeks, but where it's sitting now, big picture is just holding the 921 EMAs, holding up really well. There's been no real change in the memory shortage, and we continue to see some relative strength within this trade specifically, SNDK, WDC, Micron, etc., while the market is weak. So if that continues, this is kind of like a hideout trade, and a break over the 676, I think, will start that next leg of the breakout higher over 700 with 725 next up. I think also if we get a positive catalyst of any kind, this can go parabolic in a hurry, and it wouldn't be surprising to see 1,000. With all that being said, if there is a catalyst, a negative catalyst of some kind, or an update within the memory shortage, which I wouldn't necessarily expect, but if we get something like that, that would be what would start the reversion trade. And until that happens, we have to continue to look at the upside. One little quick bonus, MSTR. So there was some headlines that basically they said they're, financially secure, even if Bitcoin went all the way down to 8K. So there's a lot to unpack with that, but the big picture with this is, they're trying to instill some confidence in shareholders, and the stock has made a decent turnaround from the lows around 100. We had our first dip last week that ended up getting bought up into Friday, into the close of the week. So things are looking pretty good. Still holding shares here from like 109. Haven't sold any, just holding, and looking to see if we can get a move up to 150 next. Bitcoin's pretty slow. It just feels like a bit of a dead trade right now. But MSTR is showing some life, and I think if this can defend this 130 spot, a push up to 150 would be pretty convincing. I'd likely sell off around a quarter, possibly up to half, into a move like that, and then look to either sell covered calls or just put on protective puts and ride the wave. I think if this is the bottom, there's a lot of upside available over the next year or so for MSTR. All right, that's what we got for the prep this week, guys. Hope you're having a good day off. I'll see you all in the room tomorrow morning.